What's going on, guys? Gabe here with the Review Dork, and yeah, the market's closed, so no real, climatic anything's going on in the market right now. And no, I'm not going to talk about the DOJ probe, possible RICO. We're not going to talk about Credit Suisse. I mean, those are all scandals, and yet it's great to have that knowledge, but having knowledge that will create money making activities. That's what I like to focus on, right? Money making activities. More importantly, March 3rd, day of transparency. It is not a squeeze date. I have a problem with individuals pushing dates as if, you're a deadbeat dad promising your 10-year-old that you'll be there for their birthday party, but not really show up until 25 years later. Could you imagine the amount of resentment that builds up in that time, right? So setting dates and creating expectation is something that I want to avoid and something I completely ignore. Now, let's go ahead and talk about theatrical releases in 2022. In summary, over 99 titles, blockbuster titles, which include Top Gun, Black Adam, Thor, The Marvels, just some really, really big titles getting ready for 2022. Again, 99 in total. Now, I want to look at what we saw back in 2020, because in 2020, we saw only 49 movies be released nationwide. Now, I'll include a link in the description to this so you guys could see. But it was in 2020 that COVID just really just clawed its way into our lives and pretty much just changed everything as we knew it, right? And in this time, AMC absolutely struggled with only 49, yes, 49 nationwide releases. Then we had 2021, and 2021 was a year of tandem release, right? So 99 titles, we'll go ahead and close this. 96 titles in 2021 with tandem release to streaming services, right? So again, we can see how AMC began to ramp things up and improve their overall health into 2021. And then we had Spider-Man, which broke all kinds of records. Then we have AMC negotiating a $950 million bond deal, which pushes maturing debt all the way to 2029. This is bullish. Now, I say that because if we go ahead and we look at short interest on AMC, this short thesis doesn't make sense. And the current short interest, 106.92 million, makes absolutely no sense from just a common sense standpoint. Now, I don't want to think like retail. I want to think like institutions. And within institutions, no one guy is given $1 million, $100 million, $1 billion and told, yeah, go ahead and short it. No, they're not given that green light. They come up with a thesis, they go ahead, have their meeting, they figure out a way to hedge it. Keep in mind, magic word, hedge. And they go ahead and assume the risk, right? Now, when we look at what AMC is doing, that would be a whole lot of risk to enter a short position. In fact, we could go ahead and look at current pricing, and we could see at $17.90 is when we closed last. We're currently on the 4-hour chart, and we could see AMC broke below the 48 EMA. This is not really bullish on the 4-hour. However, we have a contrarian view on the daily, where we see the MACD showing bullish momentum and price action showing the 13 and the 48 converging. Now, what I would like to see is the RSI break above 50, and I would expect this to happen rather quickly. Now, this weekend we had Uncharted and did $51 million domestically. Again, that's not a final number. We'll get that tonight. But I feel like the exhibition business is in fact healthy. We have the Batman March 4th. And then we have earnings. All those things tell me that the short thesis is incorrect. which then has me thinking with NVIDIA, and we're going to go ahead and look at not at NVIDIA, but NVIDIA was the last big earnings, right? And STV and I had a conversation in how we were going to play the earnings, and we decided that we were going to play the earnings using the long straddle. Now, why the long straddle? And this will make sense to you guys as I drive home, at least my perspective. Now, a long straddle is a simple yet sophisticated options position that involves buying both at-the-money call and put, where the strike price of both options is close to the current stock price with the same expiration date, usually going past the earnings date. The theory behind, and this is important, the theory behind the long straddle is that the buyer of the position expects a high degree of volatility, keyword volatility, after the company releases earnings, but they are unsure in which direction the price will change. Now, that's an option straddle. Okay, now going back to that meeting where, these guys have bosses to answer to, and before they can get a green light on millions, hundreds of millions of billions of dollars, they're saying, okay, well, we don't know which way AMC is really going, but we do know that they have a very large and loyal fan base, people who love the stock, right? In the same instance that retail goes ahead and combs over Reddit looking for the next short squeeze play, you would have to assume that the exact opposite is true, where institutions are scratching their head and saying, okay, look it, we can short it, but we don't expect it to go down to $1. Currently it's trading at $17. Maybe it goes down to $14. But if it works against us, we've hedged our position. And this is really important, hedging the position. So what I see when I look at short interest is basically the institution saying, all right, apes, come on, load the boat, load the boat. We're short, but if you beat us, we're going to go long, and we're going to make hundreds and hundreds and hundreds of millions of dollars as compared to a very limited range where currently AMC sits at $17.90. You have a very limited range to the downside, at most $17.90. However, there's unlimited potential to the upside. So if someone's entering a squeeze play knowing that above 20% is dangerous, doesn't make sense. Well, it starts making sense when you're like, all right, let's keep shorting it because we know they have a very loyal fan base. They're going to keep buying. They're going to keep holding. They're going to keep buying some more. And then we go ahead and make our money to the upside, right? In the same way that the long straddle is positioned at both a call and a put. Ideally, what you're hoping is that any move would be large enough to offset the cost of being wrong on the other side. This is what I expect institutions to do. This is what I'm expecting considering the high short interest. I really don't care about the narratives that go on behind it. That, for me, is not a money-making activity. Understanding what's in front of you and understanding the charts and understanding, what's happening in the overall market and how you're going to allocate your monies to make more money, to buy more AMC shares, that is a money-making activity. Anyways, I'm going to go ahead and cut this video short. Guys, make sure you check out the Discord. I'll include a link down in the first comment, a pinned comment. It's free between now and February 28th. You cancel anytime. You won't be charged on March 1st. So, give it a whirl. We have over 10,000 members in the Discord who are learning to play both sides, both the buy and the sell side, and making a great deal of money doing so, right? So essentially what we're teaching retail to do is to play like institutions or to play along with institutions, right? You don't want to go against the trend. And so there's really nothing magical about what we're doing other than encouraging people to see from both sides and make money both ways, right? And we have alerts to over 400 equities that happen daily. Yeah, pretty mind-blowing, right? Anyways, this is Gabe with Review Dork. I am signing out. Peace.